What's up, traders? How are you all doing today? So I want to show you how I do my analysis for synthetic indices. So this is trading view for Deriv. That's the broker I use. So the link to this tool is going to be in the description of this video. Just click here to go to R75. That is the symbol for volatility 75 index. This is the tab for the time frames: 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hours, 24 hours. You can use the drop down here to see everything. These are the few that I added to my favorite. So we're using the candlesticks, and I'm going to be adding some indicators to help me with my analysis. Actually, just 2 indicators that I use often. The rest are drawing tools. So I'll go first for my moving average, and I'm using the exponential moving average. Let's click on it. It's added. So the next thing I'll do is to adjust the settings of the moving average. I'm using length 21, and then I am using exponential smoothing line. The line is equal to 21. I can leave the source at close, and then if you like, you can adjust the colors. If you like, adjust the style, but for me, it's pretty fine that way. Okay. Now, the function of the moving average for me is it tells me the average direction of the market. Okay. So sometimes the moving average serves as the floor or the roof of the market movement. By the floor of the roof, I mean the um, support or resistance. And bring some brown tools here. So we have support from under, and then resistance on top. So this is what resistance, this is support. If it is below the market movement, it is support. If it is above the market movement, it is resistance, right? Now, let me write that down. And then copy that, and then I'll call this resistance, right? So I have support and I have resistance. Then I'll switch in between 4-hour time frame. I'm seeing the entire market direction is somewhere. Let me look for a trend line somewhere from here. You see that? Now in physics, we usually have in graphs, we have lines of best fit. So I'm going to use the highest point right here, this one. And then the highest point down here. Also, I'll try to focus on the place where at least 3 or 4 lines or 4 candle tips, the tip of the candle touches, right? I don't want to do this because more candles touch it, because this whole gap here is a lot. It's a lot. You cannot ignore it, right? So I'll use like this. So I have this touching it, this touching it. This is almost there, not quite there. This touching it, this touching it. So I have my line of best fit. Someone else can decide something else, okay? But this is what I will do. Okay, let me lengthen the candles up a bit. So resistance, straighten this line, adjusting the coordinates. Simply copy the coordinates from one end and add to the other end. Wait, so it's not straight. Alright, so I'll do the same for this guy. Rather, I'll just copy and paste. Bring it up here. So now, when the moving average is on top, like in this case, from this point down to this point before the crossing, it is serving as support, sorry, as resistance. If you put this thing well, actually this is support and this is resistance. Please pardon me. This is support, support from under, resistance on top, right? So when the moving average is on top of the candle's movement, it is acting as a resistance. When it is below the candle, like in, let's say briefly here in this case, below the candle, it's acting as a support. So all through this place, it is resistance, resistance. Here it's just ranging. Here it's support. Now, what you notice is that often for any of the case, whether it's resistance, for instance, here, it tends to come close, sometimes touch it and then drop. It comes back, touches it and then drop. Comes back, touches it and then drops. So it's acting as a resistance to it. When it does break through, it will probably play around it a little bit and then begin to go above it far up. Let me look for a case like that. Alright, so okay, briefly here you see it was acting as a support. Goes up, touches it again, goes back up, and then finally came down, touches it, and broke through it. Then came back up. It couldn't resist it anymore. It tried to resist it here. It came down, came back up here, and broke through. Then acted again as a support, and then broke through again. But generally, you see the up and down trend. Here again, it's acting as a support. Here, acting as resistance. Okay. Then for the uptrend now, you see it will touch, then go back, come down, go back, come down. So this was like a floor of um the room, if you consider it like a house, and this is like the roof or the ceiling, right? That's an analogy I used to analyze. Okay, so now I'll have to drop down to a much more smaller time frame. I've confirmed that the market has been on a downtrend months back. All right. And even especially now, it's on a serious downtrend from, if you look at the time of this candle, for instance, this highest candle that touched our trend line was on the 3rd of July. That's about almost 3 weeks ago, about 19 days ago. So this movement has been, okay, it ranged a little bit here for 1, 2, 3 days. The 4th day, it broke through the trend line a little bit, came down. The other day, 5th day, 10th, it touched it and came down, almost touched and came down. Then it's been on a downtrend. Here, it's ranged a bit, so it's likely going to just range a bit and continue its movement down. Okay, so let's come to 1 hour time frame. Okay, so set our candle with this one click. Right. Then we have our chart this way. Alright, this is the 1 hour time frame. I can draw another trend line from up here. Use the line of best fit. I could use this. Use this. Right here. Okay. Let me zoom in a little bit. Okay. I change the color of this style. Color should be black. Okay, it's better. Now, I put this trend line up here because it will only touch 1, 2, 3 points. Now I have a lot of peaks, See the spikes? Yes. So I want to catch as many spikes as possible. Alright, so I have one up here, the very highest, and up. Then I have two, then I have three, then I have four, then I have five, and six that was broken through, and then came down, and then back up. So if you look here, the moving average line served as what? It's on top, like the roof. So it is what? Resistance. It continued to resist up until I think yesterday. Yesterday it broke it up through the roof and then had a new peak, but it did not break this former high. It broke this one. It didn't break this one though. So it came there and then went back down. Now, it didn't continue the trend exactly at the same angle, so I don't know what the plan is, but I'm watching. Now, if I drop it to 30 minutes, 30 minutes, you would see that it's getting a little more clearer, right? So there's something I want to show you on the 30 minutes time frame. The moving average is way more detailed. Okay, the 21 moving average is way more detailed. So you would notice that each time it crossed, it went clearly in the direction of the crossing, except for points like this when it ranged. Okay, now there's a place that I consider a point for my entry. I had a trade here that was very good, very, very good. At this point, I sold and I made a lot of profit. I think I completed my trade somewhere around here. Okay, somewhere around here, I sold. Some I sold earlier, some I sold right to the very end here. That was yesterday, or rather, very early this morning, very early, midnight, around midnight. Okay, so what I do is I look for candles like this red candle here. Um, look for candles like this. Okay, something is wrong with my. Oh my god, delete. Stop drawing. Will you stop drawing? Okay, I just want to get this one right here. This candle here, right? Look at it very well. Got it very well. Okay. If I get in my 21 EMA, my 21 moving average, if I get a candle like this, it is going down in a downtrend, a downward movement, confirmed downward movement, and I have the body crossing and ending below the moving average. I will prepare for a sell, and this is where I'll place my trade. At the very end of this candle, I'll mark the time. At the very end of this candle, I will put my entry on the next candle, the next 30-minute candle. This will be my what? Entry. This will be my entry. Okay, let me put the text here. Entry left. Okay, let's make this line tick. So I enter here. Then I'll put my stop loss at the tip of the body here for conservative. If I have enough funds, I want to risk more. I'll put my stop loss right above the wick, right above the wick of the other candle. Let me correct this, it's not very straight. Right, correct this one as well. Okay, correct this one as well. Okay, so you have okay, you have here stop loss. I call it small. Here you have big stop loss. All right. If you do a back check, if you do a back check, if you back test, you realize that every time the body of a bearish candle ends below the 21 EMA, the market moves in the direction of that body for at least the next 3-4 candles. So check, it will go from here where I entered at least 3-4 candles. Usually by the time I get 3-4 candles, I'll be out of the market. But if I see an opportunity for more, I'll keep going. Okay. Now, if you look here, you will see that. Let's do a small calculation. Copy. Let's try a calculator. Now we are doing this minus this. See, we have 3,304. Just simply divide this by 100, and we have the number of pips. So did I say 100? Divide by 10. Divide by 10. So let's multiply by 10. Yes, you have 330 pips. Now, if you have 330 pips, let's just say 300 pips, and you enter a volatility indices for 0.01, 0.001, yeah, you're going to have this multiplied by 0.1, Yeah, so this multiplied by 100 gives you exactly how many dollars you would make. $3, right? For 0.001, the smallest lot size. That's what you're going to make from this point to this point approximately. Okay? Now, let's do a quick check if this actually works. Okay? Where do you put your take profits? Where do you put your take profit? Put your take profits. Put your take profits where the previous low got to. Not below it, just somewhere before it from the top. Alright? So you put it somewhere depending on your risk level. You can just put it somewhere here. The most favorable, I think, for me is here. Okay? So by the time it hits here, what about that one is here? Collect the one you have. Now, if you are a trend trader, you can simply enter a buy from here, but that's maybe for another video altogether. Now, what happens when you see a green candle ending below the EMA? It is not a sell signal. It has to be red, like this one. It has to end below. And the reason is that this one actually ended up trying to break through, but could not break through at the moment. So it will try again and break through. Right? So it doesn't work that way. Now, if you have a giant red like this, with half of the body or more percentage of the body is above, you don't enter that one. Because this is where I would have entered the trade and it will have just gone this way for a few minutes or seconds and then go back up and bring me out. Besides, this would have been where my stop loss would be, and it would be too big from this point. Okay, so let me look for another opportunity to show you that another opportunity is here. This, even though the line didn't cross through, but it's almost touching it, you can decide to enter from here and put your stop loss here. And you see that you have at least collected 1, 2, 3 candles. Right? Let's look for another opportunity. So the sweet one here. This ended below. This one here ended below. So your entry point is right here. And your stop loss is at the top of the body here or at the tip of the wick. This would have given you probably up to 500, 600 pips, maybe more. Okay, let's do for another one. This is another good one, but the stop loss here will be a bit high. If you have a big account, you can try this type. So you see the body of the candle. This is the kind of candle we are looking for. The body of the candle ends below and it is bearish. This one, the wick is too long. It's too long. Look at it. The wick is too long and too far away from the moving average. We want it close like this, like this, like this. Oh, no, not like this. This one, the whole body is too big outside and above, like this. Okay. Let's look for another one. Let's look for another one. This one is another good one, right? But didn't give too much, of course. All right, so you're looking for candles. This would have been a good one, but it didn't end really below well. Okay, and this is not a very clear signal. I've gone the other way, but well, this is a very bad one because of the stop loss going to be too high. I'm going to take that one. This one is a good one, right? So you have the wick, see it? You have the body below. So when you enter here, your stop loss is going to be just above the body here. If your account size is big enough, you can put it up here. And you see how many pips it will have given you from up here, 1, 2, usually 3 candles, you're out. This one is not even a very clear one. The wick is too short, and the length of the body is too long for us to enter here. It's not a very good signal. It eventually went in favor of the sell. This is another very good one. Okay, but this is a case where after the first candle, the second candle would have blown if your stop loss was here above the body of this candle. That was supposed to give us a signal. So that is it. Right, I hope you had something to learn from this video. Always learn to pay attention to the details that the market is telling you before you take a trade. Right. So when you're looking for a buy, let's see if you can reverse this coin. All right, this is a good one. For a buy, you look for a candle, green candle that ends above the moving average. So your entry is going to be at the end of this candle right here. So you enter a buy here, your stop loss is going to be just below the body here. But if that was the case here, you would have been taken out and then the market will still go up. So that is why most times I recommend you put your stop loss below the wick. For a buy now, it's going to be below the wick. So right below here. So it's going to be giving you a lot, right? Let's look for another opportunity for a buy. Another opportunity for a buy. This one didn't give us a clear signal. I wouldn't go for this. You can't tell if the market was going to go down from here or not. Usually, looking back, it's easier to understand than looking forward. These two didn't give us a clear signal. This one is a little bit clear, but as you can see, it's ranged too much here. Okay, so basically you look for a candle whose wick crosses through the EMA, follow the direction of the body of that candle, put your stop loss right close to the end where the body ends, or where the body started from rather. Okay, like if it's here for a sell, you put your entry here, you put your stop loss right where the body started, right here. So take 3 candles, when you're out, you go your way. Alright, so thank you very much guys, and I hope you enjoyed the video. I'll see you in the next video.